Good evening, traders. Good morning, our American brothers and sisters. And good late evening, our European brothers and sisters. Today, I'm going to introduce you to a new, not new, but actually an easy trading strategy called channel trading. So, from the way the name describes it, basically using channels to trade. And if done properly, can be very, very profitable. So I will quickly show you in the charts how you can identify these channels and then how you can trade them. Ideally, almost all channel trades are done using pending orders. In other words, you will have identified the channel that has formed and then put your pending orders so that when the market breaks the channel, then you are in the trade. Okay, so we'll get straight to the charts. Today I'll start with IC markets, the C Trader platform to try and identify where the channels are forming. So ideally, channels are very good for longer time frame, not the daily scalping, unless you're going to scalp between the channels, as you will see shortly. But it's most ideal for people who are doing swing trade or even longer than that. So within the day, you can trade the channels using half an hour and 1 hour time frames. So the setup procedure or process is the same. First, you look at a higher time frame. Like in this case, I've opened Euro USD, my favorite, and I've opened the daily time frame. And in the daily time frame, I just look at the charts. Ideally, I should be able to identify the support and resistance zones. No, but for now, I will not even do that because I'm trying to introduce the idea of channel trading. So what you do is you look for the tool. Many of the platforms do have tools that can help you draw a channel. Okay, and if they don't, they still help you have a tool that draw the trend line. So let's first start with the horizontal, and then we will look for like the ones that are trending. So for horizontal, what we're saying is if you can find a channel is just a place where the market has been going up and down, up and down, up and down for a while. Okay, so number one, option number one, okay, the market is going up, down, up, down, up, down, up, down, up, down, up. You see, as you notice, this market is actually oscillating between certain levels, that level and the level down there. Okay, obviously, I mean, I've exaggerated, but usually just like the first two or three. Once you notice the first, two or three here, then it's time to enter those trades, or rather, put your pending orders. Usually in the market, you'll probably just see the first, uh, okay, the first two or three. Then you identify, you say maybe there is a channel forming up. Okay, so you've identified that. So then, how do you trade this? You trade it by if it's first you identify the time frame. Assuming this is a daily chart, okay, then you can come lower to maybe 4 hours or even hourly. Okay, and if you notice something like this, then you choose which time frame you want to trade. Okay, I highly suggest it should be 5 minutes and above. So once you pick the time frame, then you come and draw the channels like I've shown over there. Okay, like I've shown here, but hold on a second. Okay, so I come here and change the time frame, assuming that I want to trade half an hour, so that's 30 minutes. Okay, then I look at the 30 minutes and look for other opportunities to trade. I don't have to even go far, but assuming that this was the time, okay, here, then I draw my channel. Okay, so horizontal line, actually, there, the purple line there. Actually, let me not use that. Let me use a box. Even easier. A rectangle. Yeah, there we go. Okay, so I will draw a rectangle there. Okay, wish this color was brighter, but you can see it. Okay, the rectangle there, which means the market has been going up and down, up and down, up and down, up and down. So to trade this, you set up quickly pending orders before the market leaves that pattern. So you set up pending orders, like in this case, at 30 minutes. So what I'll do, I would actually set up like 20 pips below and 20 pips above. Where's my measuring tool? I come here. So from this point, if I go down 20 pips, okay, I will be right at the last low. So that might be not a very good trade. However, if it breaks below that, why not? Okay, so below that, I can put a pending order, which is a sell stop. Okay, stop order, sell stop, place order. All right, I have already put a sell stop there. Now, again, I'll do the same thing up. All right, same thing up, 20 pips. Okay, 20 pips is right there. There. All right. Then I do the right click. They do a buy stop. There. So as you can see, I've put a buy stop and a sell stop. I've already assumed that you're going to take only 10 pips profit. So from here, you set up your 10 pip profit. Now in MT4, you can't preset, but you can go back and modify the trade you've put. So here on Seed Trader, you have to go to the actual trade. Okay, the orders. Actually, you have two positions. All right. So you go to each of them and you modify, and you say you only want to take. You enter the stop loss. Okay. Usually, the stop loss is the last low. Okay. Or if there's too much volatility, okay, you just don't have a stop loss. But most people prefer to put the last low. I'm going to show you where that is, and then you take profit. You say you only want 10 pips out of that market. Okay, so this one I will confirm. So I've modified that. So then you go to the next trade. Again, you modify. Okay, you want to take profit 10 pips. Okay, stop loss, the last low, or for me, when I'm doing my scalping, I do 35. Others prefer not to have, but I prefer to have a stop loss. And then you modify, and it's done. There. So here we have set up pending orders. Let's see what happened to them in the event that actually, because I've moved the charts a little bit. So I'm gonna scroll forward and see when the trades were triggered and if we would have actually been in profit, or at least in the trade before the profit. Now, the take profit, the stop loss, in this case, normally other people prefer to put the stop loss to be that line on top. Okay, just 1 second. So this is the top of your rectangle, and this is the bottom. So if you're doing a sell, okay, which you put the pending order, then you put your stop loss, this top one here, as your stop loss right there. That becomes your stop loss. When you're doing a buy, that means you're starting to buy here. You're saying you're okay with everything, but you want your stop loss to be this number down here. Okay, so please note that some people prefer longer stop losses, okay, because of the volatility. But I've found this to be working a lot, because if the market breaks up and triggers you, then you'll get your 10 pips there very quickly. By the time it actually comes back, then you don't want to be in that trade again. So it's okay to be removed at that level. Now, the same thing happens if the market starts going down and you're triggered into the trade here. You only want your 10 pips. 10 pips, then you're out. If the market decides to go back, you don't want it to go beyond there. That's a loss you're willing to take. All right? Okay, I'm going to erase that and see what would have happened if we took those trades. All right, so I'm going to, okay, let me see. All right, so let's see what happened. So as you keep going, okay, it has not broken. It's still within the channel, but now it's going up. Please note where it is right now. It's right here. It's almost going to trigger our trade. Remember, our take profit is so close that you might miss it. Let me just make sure you can see it. We are talking about entering here and taking profit there. So pay attention. Okay, if we chose to go down, then we'll be entering there and taking profit there. Only 10 pips. So regardless of where it's gonna go, okay. All right. Let's see what happens. What will have happened? Okay. Oops. There. It has come back. Now, please note the wick is so close. I don't know if it touched it, but if it touched it, we would have been in trouble because it would have triggered that trade. And if it triggered the trade, it means that now you would be on negative. Okay, but remember you have your stop loss here. So let me see if I can zoom in. Okay, okay, there we are, there we are, there we are. Okay, it's about to break out from the channel, breaking out from the channel, going up, going up, going up. Unfortunately, it did hit our setup, but I can't see it very well. But the wick went there. Sometimes it would trigger the trade on a buy. Sometimes, depending on how close it is, it may not. But it looks like it did. If it did, then we're in trouble with that. Okay, but let's see what happened. On the downside, it comes and it hits. Okay, I think no, I think we are right. We are right. We entered the trade and took profit. Okay? On the second one, we entered the trade and took profit. But even on the first one, no, on the first one we did not. But on the second one, we did enter and we took profit. Let me see. Colors are very faint. So we entered the trade at this point. Oops. We entered the trade at this point, sorry, and took profit right there. Okay, so right here and took profit right there. So this one would have been a loss. Okay, but good thing is it would have been triggered here with a stop loss. But here we would have entered the trade and taken a profit right there. All right, so that's one example. Let's look at other examples. Okay, so pushing on, we would look for another channel. So that was the first channel. Let me see if we have another channel. Okay, so you look at the charts and try and find out where the market seems to be up and down, up and down. Sometimes they don't have to be horizontal channel. You know, they could be a trending channel. Okay, like this one now. This one could be a channel. You see, for a long time it is trending. That means from here all the way up to here. Let me see if I can draw. Okay, I can draw another rectangle here. So again, you can take this little one. The little ones would be something like that. Okay, that's one channel. Again, for a big time frame, that's okay. The number of candles in there should be at least 10, but this is 1, 2, 3, 4, 5. So that's not good enough. We have to look for a bigger channel. 8 to 12 candles would be good. Let me see if we take this big one. Oops, my rectangle has refused. Okay. I'm trying to draw this rectangle, but it's not being user friendly. Okay, let me do it again. So I'm going to try from up there. Okay, there. So again, the same thing. We have that rectangle there, as you can see. So now we need to figure out if we can put pending orders up or down. Now, this is not a good one because, as you can see, they seem to be all down at some point, then they go up, then they touch the upper top, and then they come down again. So it's not a very good channel. Okay. However, the fact that they are within the range of the candle on the left would be good enough for you to enter the trade. So same thing, you put your pending orders above and below. So 20 pips, 20 pips below. Let's see what would have happened if we had taken those trades. So 20 pips above. Okay, you measure, you come there, 20 pips right there. And then you do buy stop. Okay, buy stop. Okay, and you want take profit 20 pips. Okay, we've done that. Then you come down again 20 pips. There we are, 20 pips. Okay, again, sell stop. You right click, sell stop, take profit, 10 pips. Did I say 20 pips? No, 10 pips. Okay, I think I must have made a mistake on the first one. It should be 10 pips, not 20 pips. The take profit, take profit. Modify. Yes, I put 20, but it's supposed to be 10. Okay, so the distance from your rectangle or from your two parallel lines or the channel should be 20 pips up or 20 pips down. But the profit you're taking is 10 pips, 10 pips, all right? So again, because I moved the charts way back, I can now check, again, it's called back testing. What would have happened if we had taken those trades? So okay, let me just mark them in yellow. All right, so this is the channel, okay, and we've taken a buy stop at that point, a sell stop at that point, but we only want 10 pips. This is 10 pips right here, and we only want 10 pips the bottom right there. Okay, so let's look on the right hand side. We expect the market to enter the trade there if it's on a buy, and to enter the trade and down there if it's on a sell. If it's a sell, we want to get out of there at that take profit. If it's on a buy, we want to get out there. Okay, so I need to move the market, but if I do move it, I think these things will disappear. So, but keep a visual, mental picture of where they are, unless you can see these lines clearly. You can see them clearly. So I will exit this marker and then move the chart. Okay. All right. So this is back testing the strategy. So let's go and see what happened. Okay, now it's moving. Pay attention to this here. Okay, see it's going up now. So it's broken this place here. There is another strategy, by the way, or just a breakout, just a regular breakout. Okay, but this one, because of the market, the way it's been behaving lately, the channel trading is probably safer than the immediate breakout, unless you're a scalper. So right now it's still dancing between the two levels. It has not gone down. Okay, it has not gone down yet. We are waiting for it to enter down 20 pips here or up there. So down, we're down, we're down, we're up. Not yet. Oh, the market has ended. Sorry. Okay, I guess this is today. This is today. But those pending orders, they will trigger eventually, depending on whether the market goes up or down. All right. So if this was way, way behind, uh, okay, you can go as far as you want. You can backtest this one. Okay. You see, it triggered up. It went up. So if you look at another channel, there are very many opportunities for channel trading. But the trick is to find the number of candles between 8 and 12 or even more. Okay, nothing less than 8 candles. So you find this one here. Okay, so this would be a good one, opportunity to make your channel. Okay, and then you trade up or down. Oops. So let's now look for the other kind, which is either a trending up or a trending down channel. So again, you visually look for those opportunities, and they do exist. They do exist. Okay, that's not a good one. Let me look for, here we are. Okay, this is a good one. Well, not as good, but there are 2 of them here. So you go here and then you mark your lines. You can see that line there. Okay, and then you mark another line down there. Okay, those become your trend lines. Okay, though not very good ones. Okay, now the concept here is the same. The idea is this market will be moving up and down, up and down, up and down, and then you set up pending orders. Okay, this is better. Okay, you set up pending orders between so here it is. The idea is the market has gone up and then it has gone down. It has gone up, but not as high, but down, up, down, up. Okay. The point is it has revisited this point at least 2 times on the top. Okay, and down it needs to have at least 2 and 3 at some point. Okay, down 1, 2, 3. Oops. So then you plan. At that point, you can draw a trend line, averagely 10 pips. Okay, averagely, sorry, 20 pips above that line. Okay, so you use your measuring tool, you measure 20 pips. Same thing down here, you measure 20 pips. Then you take your pending order, buy 10 pips, pending order, sell 10 pips. All right, and let's wait and see what would have happened. Okay, I have to move the market, rather the charts. That means I have to exit this. So, but pay attention, mental attention of this channel here. So it's gonna go up or down depending on where the market is moving, and it will put us into the trade. So let's get out of this. Okay, So at this point, okay, we are still in the channel. Okay, now it's going up there. It's broken up. Okay, come back, still there. Broken down, still down there. Broken down completely. Okay, I think if we were to enter the trade, we could have entered the trade and taken our profit even by now. Let me just see. On the bottom side, okay, if our entry, sorry, oops. If our entry was, okay, so if our entry was there, then we would have taken our profit by now already. Okay. So the channel trading is very simple, very easy. All you look for is for a market that shows something like that, whether it's trending up or trending down. Okay, and then you make something like a channel. The tools you can use there are either the parallel lines or channel lines or a rectangle. Okay. Now the thing to remember is this number of bars there should be not less than 8. Okay, not less than 8. It can go on, it can go as long as it wants. Just remember that eventually it will get out of that channel, either down or up. And your trade is a pending order, which means that it will be triggered and hopefully be triggered in profit. Now, the way to do this is then you'd probably pick a few currencies. Pick a few currencies, maybe Euro USD, GBP, USD JAPI. So you pick like 4 or 5 of them and you put pending orders for 30 minutes, okay? Because you don't know which one will be triggered. Okay? So once you set up all the pending orders, and this would be probably like Monday morning or or Tuesday, because you don't know if the trade will be triggered the same day. But hopefully, if you do the 30-minute one, it should be triggered within the day, and the trade should end within the day. Okay, so I'll make this video 30 minutes now, so we can stop, and I will wait for questions. Thank you.